Welcome everyone, this is Scott G with The Simple Trading Life. It is Thursday afternoon at 1:43 p.m. and I put that we were going to go live about 1:45. I'm just a couple minutes early, so we'll let some people join in before we really get going. And we'll probably be on about 30 minutes or so, give or take. Says I've already got some folks in here, so welcome. And watching ES drop a little bit right now after pretty solid green candle, best green candle of the day, but it couldn't make it out of the range, which we're going to talk about here shortly. Okay, it says we've already got several more, so welcome everyone. Don't know if everybody in here is from the room or if we have some people from social media that are joining us for the first time. If you are, please give us a thumbs up, subscribe to the channel, and definitely turn on that notifications bell. You'll always know when we go live. So we got, let's see here, about 10 more seconds. It'll be 1:45, and then we'll get going. Hey, Grayson, good to see you, buddy. And what you just messaged me about, already praying about it in my head. So I'll let you guys in on what excitement we had in our household yesterday. If you're in my community, you already know, but my daughter is a varsity cheerleader. She's going to be a junior this year in high school. And they've been having cheer camp this week. So they go 6 hours a day. And so the last 2 days were the first 2 days of cheer camp. And we get a phone call last night about 5 something saying there's an emergency. One of the girls on the team is tested positive for COVID-19. Come get your kids immediately. Rest of cheer camp is canceled. Your daughter needs to be quarantined for 14 days. You need to take her to the health department, get a COVID-19 test, so on and so forth. And so obviously all the parents were freaking out because there's 15 girls on the cheerleading team, and they've obviously all been in contact with this girl. And 6 hours a day, and here in Atlanta, Georgia, it's been this week every day. It's low 90s, high humidity, so obviously the girls are sweating on each other, and they do their stunts together, so they're obviously bumping in and touching each other and lifting girls up and catching girls, all that good stuff. So everybody's freaking out. And then now we find out that the coach overreacted. It wasn't the girl who had tested positive for COVID-19. It was one of her brother's friends. Okay, so twice removed from her. And then, the girls on the team would be 3 people removed. Then we also found out that the kid tested positive on one test. And I don't know. I don't know anybody firsthand who's tested positive. So I don't know if they frequently then do another test a day or 2 later. But with this kid, then they tested him again a day or 2 later, and the test came back negative. So he tested positive, then he tested negative, and now they're saying it's possible that first test was a false positive, which I've heard is fairly common. He has exhibited no symptoms, no fever, no cough, no shortness of breath, none of those things. So now they're thinking that it was probably a false alarm, but obviously all the parents got freaked out. So we had a lot of excitement over the last 12 to 18 hours or whatever it is, maybe 12 to 24 hours. So enough of that. Let's get to the market here. We've got ES up on the screen as normal. 30-minute chart. It was asked of me in the room earlier today, and I know we have a ton of new people. Our room is growing by leaps and bounds, and we're so grateful to all of those folks who have joined our room. And if you haven't joined our room, it's completely free, 100% free, no strings attached. just go to simpletradinglife.com and click on the free chat room button, and you can join us for free. But we've had just a big influx of new members recently, and it was asked of me today, do I only use the 30-minute chart to do analysis on, and do I trade on something smaller? The answer to that is about 90% of the time, I'm actually taking my trades on the 30-minute chart as well. In fact, this week, I've been having my best week in pretty much ever. I've been trading for over 28 years, and I had 1 month one time where I was 90% for the entire month. That's a total anomaly. I'm normally about a 60% win rate trader, which is still very good, right? You know, they say that most very good traders are going to be around 60 to 65%. You know, you'll occasionally have months where maybe you get up to 70, 75, and then other months where you might be closer to 50, and it averages out to around 60, 65%. But this week, and I've cut it off for the day, but this week so far, Monday through today, I've taken 34 trades, and I'm at 91% for the week. So it's been a pretty phenomenal week. I've been trying to be as smart as I possibly can. Monday and Tuesday, I had no losses whatsoever. I was 6 for 6 Monday, 8 for 8 Tuesday. Then yesterday, I took my first 2 losses, and they were rather large, actually. They were pretty big losses, because I feel like in my mind, even though as much as you try to fight it, when you're on that kind of a hot streak, your mind sometimes clouds your judgment, and I started taking bigger chances than I normally would, and a couple of them got me. I had some bigger losses. Now, don't feel bad. I ended up really, really strong for the day in terms of win rate and profit. And then today, I've only had 1 loss, and it was a small stop-out loss. And I think I'm 7 for 8 today, I think is what it is. I posted it in the room. It's in the room. But been having this phenomenal week. And today, you know, I kind of wanted to preface that, you know, today I want to talk about the action here, which has been very, very, very difficult. Hi, Kelsey. I see you there. Took a scalp from 3204 to 3200 for $18 profit. Do you think that was a high probability trade because of the wicks to the left, or did I get lucky? And thank you for the compliment, Kelsey. Well, it doesn't really matter if you got lucky or not, as long as you profited. But Kelsey, you're asking the question at the right time, because we're kind of going to talk about this. So if we come back over here, what is that? Last night at, I think that's 10:30. So from 10:30 to where we're at currently, you can see price has just been ranging. I mean, literally just up and down and up and down. And even inside the range, look at the chop that has been going on almost this entire time. This was the first really solid green candle we got. It got right up here to the top of the range, then it reversed, came back down near the 20, and now it's trying to push back up. So when you're in conditions like this, some people just choose not to trade, and that's really not a bad strategy. I mean, especially if you're somebody who doesn't take very many trades in a day. You know, I'd say an average day for me is somewhere between 6 to 10 trades, something like that. A heavy day, it might be 15 or more, and a light day, I might not trade at all, or it might be, you know, 1 to 3 trades is a light day. But on the average, I'm trading about 6 to 10 times a day. And I'm very conservative for the most part. So when I'm trading in conditions like this, somebody like me, I might be able to get away with it a little bit more because I'm not trying to take big swings on my trades. Just reading comments here. Yep, I've been expecting support to act as support and resistance. Yes, okay. Good thing I took profits. There you go. That's right, because it obviously bounced right here. Right about the 3,200 level, as you can see. And that's right, small profits pile up. And that's, you know, I preach that in our community. I don't expect everybody to trade like me. I'm going to trade the way I trade, and I'm going to teach you guys the basics. You can either trade like me, or you can trade your own style, or you can incorporate some of the things I do, or none of the things I do. It doesn't really matter to me, right? I'm just trying to help people be consistently profitable by teaching them simple, basic things that will lead them to be profitable if they utilize them. Now, you can use a lot of what I teach with other strategies. You don't have to trade exactly the way I do, but I am very conservative for the most part. When I tend to get aggressive, like yesterday, that caused me to have 2 bigger losses. Now, I've had a cushion because I was having such a good week to begin with, but right, you could look at the other side of that and say, oh, if you just would have stayed ultra conservative, then you wouldn't have taken those 2 big losses and you'd have even more, right? Yeah, you can look at it, any of those ways. But in reality, I'm about a 60% trader normally, right? So I'm way above the curve right now. So to me, that's why I've been extra cautious, and I've really been kind of cutting it off late morning and just not trading the rest of the day. There's really no reason for me to, especially when we've been in these kinds of conditions. Would I have seen this move right here? Probably not, right? Just because of how choppy it's been. Now, you can look down here and you can look at all these bottoming tails, and you can look up here and you can look at all these topping tails, and that tells you the story. That tells you that I put this in the room, that there's equilibrium in the market right now. That could change at any time, right? This could blast out of here and start going higher, or we could come back down here and get below these wicks and start to go lower. Our first obstacle down here would obviously be the 200. When I set this alert earlier today. When I set this alert, the 200 was below here. That's why I set the alert where I did. I'm actually going to take it off right now because it's actually the 200 is moved above there. The 20 is moving down. The 200 is moving up. That's telling us that energy is building. At some point, right, they may come all the way together. We may get a cross where the 20 crosses the 200. Excuse me. But just the fact that see, if you look over here, how wide they were apart, okay, and now this one's moving down, this one's moving up, and as they come together, that is a building of energy, and at some point, price is going to break one direction or the other. Now, how far will it go? Well, then you look back at previous price action, both above and below, to make that determination. All right, so let me get back over here. I'm going to make this a little bit wider. Okay, Jose, that's a great question. So Jose is asking, if I was starting today, what would you tell your younger self? Now, we were kind of talking about this in the room before I started doing the live stream. When I first started trading, you didn't trade on a computer. You literally had to pick up the phone and call your broker and tell your broker what trade to place. And sometimes your broker would try to talk you out of it, or would say, oh yeah, that looks really good. And then he would try to place the trade for you. Then he'd call you back a few minutes later and say, hey, Scott, we bought whatever. And back then, I didn't trade options. Back then, it was all shares. So, whatever money I had at the time, Scott, we just bought $5,000 worth of Intel. I'm just making a name up. Long, right? Long. And then every morning I would read the newspaper to see, okay, what did Intel do yesterday? Or I could call the brokerage at any time during normal business hours during the trading day and say, hey, where are my positions at? Okay, I'm just making stuff up. Intel's at $30.50. Baker Hughes is at $15.41, and whatever ones I owned at. Those were ones I owned at one time. And then the next day I'd look in the paper, and sometimes you could even pull up little charts. Like in the newspaper, they would only give you like little charts for like the most popular stocks. And then you'd make decisions basically based on trend. So back then, I wasn't trading with Fibonacci's. I wasn't trading with moving averages. I wasn't trading with any of that. I was trend trading. And that's what most people did. You tried to determine a trend up or down, and you traded it. So what advice would I give my former self? So if my former self was starting today, I would say spend a lot of time at the beginning learning proper trading psychology first and proper risk management second before you ever worry about learning any kind of strategy. And as we're talking here, you can see prices starting to fall again. We'll keep our eye on that. But those are the two most important things. Now, back then, I read a little bit. When I say a little bit, I guess I'm selling myself short. I read a lot on trading, but the books that were on trading back then were totally different. Some of the strategy books of the time were really geared towards trend trading, or they were geared towards like a system where trying to think how to describe this. You would buy and sell based on price action. But what you were trying to do was like, it was almost like how some people play blackjack in a casino, right? Or roulette. So if they lose a couple of times, what do? They bet bigger, right? They take a bigger position because if they hit, then it covers their losses. So there was a system that I used to try to trade way back then that was similar to that. And it was literally a book about that thick that was all about this system. It was very complicated, and it was basically, it would tell you if you followed this system within 7 years, you will be a millionaire. That didn't happen. That didn't happen. But it was based on a strategy like that. So I'm just going to make something up. You're playing a trend to the upside. Well, based on wherever you entered, there was like a mathematical formula. As long as the trend kept going your direction, at a certain percentage, it would tell you to start taking off profits. So again, I'm totally making this up. Once you're 20% up, it would say, take 30% of your position. And then once you were 50% up, take 30% of your position. And then once you're 75% up, take 30% of your position. Now you're only left with 10%, right? And then that was left to run, and then you might have an ultimate target. But if it was trending up and then you would start to get pullbacks, right, it would tell you to buy. Now, it's going to be going against you when it's pulling back and you're long-term swing trading, because these were long-term trades. These weren't, I was only in them a couple of days. I was in these trades typically for months. So that system would be, if price pulled back, you had to figure out the formula, the calculation, how many percent did it pull back, and it would say, okay, if it pulled back 5%, you buy this amount. If it pulled back 10%, you buy this amount. If it pulled back, so on and so forth. And basically, what is that doing? It's like averaging down. But it was this really complicated system, and I used to trade that way, and it was not fun. It was not fun at all, and I did not make $1 million in 7 years. So, again, going back to that question, I would just tell my former self or anybody new that's just starting out, worry more about trading psychology and risk management than anything else at the beginning. Then, once you start to kind of have a feel for those things, concentrate on one thing, one strategy. I'm not saying one equity or one future or whatever, although I do think you should keep your pool small. But concentrate on one strategy at the beginning and make sure that you can implement that strategy over and over and over again successfully. Once you know that you can, you've had a large enough sample size, then add another strategy. And do the same thing again. Now you have 2 strategies. And then once you've got that one dialed in, add another one. I have more than one strategy, but it's because I've been trading for so long. So I have a whole, let's call it basket of strategies. And depending on what the market's doing and what price action is doing, I can implement different strategies. Some trading books out there, are against that. They basically say you should have one strategy period and just find, the stocks that fit that strategy. I agree with that, especially when you're new, or you're struggling, you really need to narrow your focus. But once you become experienced and you're experiencing some success on a regular basis, not just once in a while, on a consistent basis, it only benefits you to have more strategies at your disposal. But I'm not saying that you should. I think it's very difficult, and I've talked about this before. I have a friend who used to trade this way. He would be in 15 or 20 different equities. He's an equities trader at one time, and he would be using 5 or 6 different strategies on all these, 15 to 20 names. And sometimes he would do really good, and sometimes he would lose his shirt. More often than not, he was losing his shirt because he was just totally confused all the time, because he just had so much stuff going on. And he asked me one time, he's like, hey, could you give me any advice? And I told him the first thing I would do is I'd narrow your focus down to 1 to 3 names, whatever they are. I don't care if they're futures, forex pairs, equities, whatever. 1 to 3 names and 1 strategy. And just use that 1 strategy on those 1 to 3 names until you get it dialed in and you're winning at least 60% over 25 to 50 to 100 trades. Then maybe look at adding another strategy in, but not necessarily widening how many names you're going to trade at the beginning. Because I think people lose focus. I do. I mean, I'm just telling you, I do. I used to try to do that many, many, many years ago. 10 plus years ago, I would try to trade 10 to 15 names at a time, and it was a joke. For me, it was a joke. Right? I just, I can't stay focused on 10 or 15 things at a time. I can stay focused on 1 to 3, and I can do really good at that. I mean, you guys can see in my room, I primarily trade ES, right? I'll occasionally trade some equities. I took a nice trade, what was that, a week ago. Oh, I put it in the room. It was a trade idea. Why am I drawing a blank? Oh, on Delta. DAL, or was it United? I can't remember. It was one of the two. It was either United, I think it was United, UAL. But I took a swing trade, which I don't normally swing trade either, but I like the setup, and I made a nice trade on it. Now, I didn't capitalize like I could have. I got out a day early, and the very next day, the thing really dropped, and I would have made like 300 to 350%. And I didn't make that, but I profited very nicely, because it definitely moved the direction that I said it was going to move. But equities once in a while, and then forex, I kind of go through waves with forex. Whenever I think that ES is getting wonky and I don't like the price action on it, or it's extreme volatility and the premiums are outrageous, like back during the market correction, for about 2 weeks straight, I traded nothing but forex. 2.5 weeks, nothing but forex. Then once it finally, ES started to finally settle down, I went back to ES, because it's kind of my go-to, right? I know it intimately. It is the market, so it pays me to know what's going on with the market, because that helps me help you guys with our watch list, with any trade ideas and things like that. It's always going to be dependent on the market. About 80% of the time, sometimes even more, 85% of the time, the majority of the names of equities move the same direction the market moves. So if the market's going up, 80 to 85% of the names are going up. If the market's going down, they're going down. And so then there's another strategy that you could look at, right? You could look at the names that are going against the market. Some people only do that. I've told you guys that before. I know a lot of traders where that's kind of their strategy. Every single day, once the market opens, they kind of let the first 15 to 30 minutes of regular trading hours play out, and then they start looking. They have scans for all the names that are going opposite the market, and then they look for trades on those names. It's just their way to filter out the majority of things and kind of bring the pool down. Okay, let's see here. I want to make sure I'm not missing anything. Jose said that he thinks he's heard of that technique before. Don't hold me to this. I want to say it was called the AIM technique, like AIM, and those stood for something. But my gosh, it was 25 plus years ago when I'd read that book and was trying to implement that strategy. But yes, it is very similar to a strategy that somebody might use in blackjack or in roulette, and it's just based on whether you're winning or losing. That determines how you buy and sell. And obviously, the book claimed that if you followed the formula, you were guaranteed. It wasn't like a guarantee, like if you didn't do it or didn't make it, they were going to pay you $1 million. But they were like, we guarantee you, if you follow this, you're going to make over $1 million in 7 years, $1 million profit in 7 years. But that didn't happen. So anyway, so let's get back over. Let's look at the market, and then we will take a look at a few names here in a second. So again, we are still experiencing whipsaw. Look at this. Up, down, back up, right? And look at these candles over here going all the way back. Look at all these bottoming and topping tails, just up and down and up and down. And sometimes on the same candle, like these, up and down on the same candle. Over here, up and down, up and down, up and down. I mean, it's really, really whippy. So if you're somebody who really struggles in those conditions, what you definitely want to do is just not trade, right? Until something changes with this action, it's not going to stay this way forever, right? So you miss a day, so you miss a day. If it protects your capital, that's what's most important. Okay, Rohan, can you show how you traded ES today? All right, let me bring it in a little bit tighter. All right, so on the majority of the trades that I've had today, it was based on what I could see with momentum, right, and price action at the time. So here was our opening candle, right? And look at the candle that led into it. Okay, here's the candle that led into it right here. Okay, this is a shooting star. Okay, I don't like this wick though. I would have preferred that it didn't have that wick on there. However, as I've told you guys before, now it ended up, let me clarify this. It ended up, look at this huge, like big whippy range, both to the top and the bottom. What I expected to happen, and it did happen, and I was able to capitalize on it, was the very first move of the day went right to the 20. And those of you who are watching in real time remember this. And then what did it do? It came all the way down to about right here. Okay, so when it came back through the range and it went underneath opening price level, that was a trade, right? And I was being very conservative with my target. I think it was 90, 31.94, 25, I think was my target. See, if you look over here, 31.94 was basically the bottom of this range and about the bottom of this. Let's see. This was 31.93.75, and I think my target was 31.94.25, which it easily hit, but then it bounced. It didn't do this longer one until it came back up, then it went up, then it came back down, and it went even further, then it went back up, and then it went this direction. And I took, when it went this direction, when it cleared the 20, I went long, right? And I had a stop. And I'm trying to remember, I think that was my only loss. Can't remember if it was the second or third trade, but anyway, it barely went up and started, it looked like it was going to go, and then it reversed, and it stopped me out. But then it went again, and when it went again, I was able to catch it. And so what I was able to do on these first few candles of the day, I played that strategy back and forth. I was using the 20 and opening price level and the bottom of the range as my guide. And I was just taking small, safe trades based on what was going on, because it became very apparent to me. And this is what I was trying to say in the room. There's a lot of people who can't trade this kind of action. And I don't blame you. It's not easy. It's not easy. But what I was doing, let me go back. Okay, I was taking in all of this context right here. And what do I mean by context? So what did we say this was? About 10:30 at night. So from 10:30 at night, and remember, I wouldn't have seen anything before the market opened. Whoops, I went one too far. Let me see if I can move this. There we go. Okay, right before the market opened, this is what I would have seen. Okay, just follow me on this. Now, if I'm looking at this, and I didn't draw the box in until later because I was just doing it for your benefit, but I could easily see with my eye that we were in a range and that price action is doing what? It's whipsaw, right? Just look at all the tails, both top and bottom. These are the tails down here. And these are the tails up here. Okay? Topping tails, bottoming tails. So I could look at that price action. I knew we were already whipsawing and we were in a range. So then you start putting that all together if you're somebody who scalps. I do a lot of scalping, primarily. Scalps and day trades. That's how I trade primarily. I occasionally swing trade. So based on what I could see and what I knew price action was doing, once we started getting into this action, I used what was around me, right? I used down here, okay? And I usually ignore these. I'm usually playing off the bottoms of the bodies. Same thing up here. That's why I draw the boxes the way I do, right? Because that's where the closes were. And then I use the moving averages if they're close enough, and then the support and resistance levels. And if there is any supply or demand that's close, that's what these blue lines are. So demand doesn't start until way down here, and supply was up here. All right, and if I go to the next candle, okay, again, whipsaw, down and back up. Okay, and I can use targets like the 20 or the bottom of the range to make simple, high probability trades. Because you know, just looking back through here, you know that this has been tested a lot, so it's likely it's going to at least get here, right? And the 20 has rejected a lot. So you can use the 20 or slightly above it. Now, when it broke above, back here on the first one, when it broke above there, the first time, I was thinking it was going to shoot up to 32.06. It didn't, and I had a stop in place. Like I said, it was either second or third. It came back and stopped me out. But then it went back the other way again, and I was able to catch it. Okay, but the next time, I didn't put a target way up here. Okay, it was much more conservative. All right, now let's go. Okay, so this is how it would have been playing out in real time. Now this was like the last one. So I took I think it was three on this candle. This one, I did set a target up here, and I set one a couple dollars below it, and then I set one, I think, even below that, and all three of them hit. And then that was it. Just done. Just done, right? Because I'm looking at all this action. That's an hour and a half into the day. There's really no need to have to do anything else. So that's how I played it today. And as you can see, look what's happened since. It just has continued all day long. Okay, this action has been in the range, and it's just continued to whip back and forth, sometimes on the same candle, sometimes here up, back down, back up, right? So I was just done. So hopefully that kind of answered your question, and it maybe shows you what I was looking at. Now, again, I'm not saying that everybody should trade that way because it's not easy. It is not easy, and there's a lot of people. The majority of retail traders cannot trade when it's whippy like this or when price is ranging. That's why so many trading books say not to trade when price is ranging. Okay, this is a range right here. All right. A lot of trading books say do not trade when it's ranging. The reason they say that is they know most people can't do it. Now, there's some people who can. And if it takes patience, takes focus, takes discipline, and take all that and put it to the side, it takes being conservative. Because if you're trying to reach, well, I want to try to get down here near this. Okay, it came all the way down here before, so I'm setting targets down here, right? And maybe you entered up here somewhere. I'm just making something up. I'm just making something up. Or maybe you entered right here, right? On the break of this, okay, and your target was down here, it never made it. It never made it. It never made it. And it whipped way back up, and you would have lost money. So that's where range trading or trading in the chop, or when it's whippy like it's been today, that's where it gets most retail traders, right? They're being way too overzealous for the conditions that they have, and they're setting their take profit targets way too aggressively. You have to take it out little chunk by little chunk. And I'm telling you, I even fall into that once in a while. Okay, once in a while, especially if you've won a bunch of trades in a row or whatever, you start to think subconsciously. It's not like really, it's right there in front of you and you're saying, okay, well, I know it's been down here 1, 2, 3, 4, 5, 6 times. So this time it's breaking through. So I'm setting a target. You know, it's not that it's that in front of your face. It's almost like a subconscious thing. You start getting a little bit more aggressive and a little bit more aggressive, and then boom, something goes against you. And you didn't have your stop where it was supposed to be, or you're trying to stop out manually instead of having a mechanical stop. So, all right, let me see here. Okay, so I missed several things here. Hang on a second, guys. And we have a bunch of people who've just joined us here in a little bit, or just in the last 5 minutes or so. Please give us a thumbs up and subscribe to the channel. I'm just trying to read back through these comments. Okay, so one of the things I missed, it says, what's the smallest that you've ever scalped? And since it's easier to predict smaller time frames, have you ever picked super small price target, a super small price target? The answer is yes. If it's too small, though, you don't get enough reward to risk, so you have to factor that in. But to me, something that's small is maybe I'm taking 3 ticks of risk. That would be small. That would be a tight stop. That'd be 37.50 on a stop to try to make like $100, which is only 8 ticks, right? Risking 3 to make 8. So it's almost 3 to 1. That's about as small as I would shoot for, right? If it's anything smaller than that, it's really almost not worth taking. Now, sometimes what will happen, though, is it looks, based on what you can see, it looks like, okay, I can risk 6 ticks to try to make maybe 18 ticks. All right? But then price moves, say, 12 ticks, and then starts to reverse against you. Well, by the time it's moved 12, I've moved my stop into profit long before that. And then if it reverses back against me, I'll get stopped out. And it might be a small, I might make 50 or 37.50 or $25 or something, wherever my stop was, but it was in profit. I just didn't get to where my take profit target was. And somebody could go back through trades and think in their mind, well, he must not have had a very good reward to risk. No, I had it all planned out. Price action just didn't get there, right? I wouldn't have entered the trade with a 6 or 8 tick stop. Let's say 6 ticks. That's what's 6 ticks? $75. I wouldn't enter with a 6 tick stop if I didn't think I had a reasonable chance of making 18 ticks. So I hope that makes sense. Doesn't mean you're going to make it. It just means you should have a reasonable chance based on what you can see to make that, or you shouldn't have that six tick stop. All right. Let me read through some more of these. Okay, Grayson wants to know, how is Euro USD looking? We'll go ahead and take a look at that. And let's see here. All right, let's go to Euro USD. Euro USD. Okay, let me squeeze it in here. Now, when I trade forex myself, I typically do use some different time zones, listen to me, time frames. 4 hour, 1 hour, and 30 minute. Those are the primary ones I use to trade off of and do analysis. I still primarily will use the 30 minute, but when I'm trading forex, I like to look at a 4 hour. Now, I have not updated these in a long time. Let's just do that, because there may be some folks watching that don't know how to adjust or even draw in their support and resistance lines. So you go to the 4 hour, then you go to a line chart. Okay, we're not going to use the line chart for anything else but putting our levels in or adjusting our levels. And I have not adjusted these in a long, long time. I mean a long time, like since back in the market correction. And look how some of them are still being respected. All right, so now if you want to be exact, if you just hover over it, it'll tell you where price closed. 1436, so let me see. All right, so right there, so that's exact. I would probably put one here, 1410. Okay. This one I'm going to leave for now. This one is obviously working. I'm going to leave that one. Let's come down here. Okay, now this one I'm going to adjust. I'm going to move it to right here. Let me see what this one is first. It is 1308. And what we're looking for those of you who don't know, now first of all, I do have a video where you can watch. Give me 1 second. Get that set. All right. There's a simple 2-minute video, how to draw accurate support and resistance lines. So you can watch that, but I'll explain to you what I'm doing right now. You're looking for sharp pivots. Okay, you start with current price and you work backwards. Sharp pivots, bigger moves. You want to avoid the chop. You don't want to put stuff in here. Okay, that's choppy stuff, right? So sharp pivots, bigger moves, and then places where price seems to be respecting the same area. So I would probably, because see this and this, see how close they are? I'd probably go ahead and put one in here, 1366. Okay, see that? All right, we'll put that one in there. And I'm definitely going to add one here. This one would be 1270. Got it. Okay, we're not worried about these little ones here that poked below because your current action is the most relevant. Okay, we come back over here. All right, now these lines would have been drawn well before this action was ever here, but look at how it's respected it. Okay, now I'm going to adjust it because I want it to be a little bit more accurate, and I'm going to put it right up here, and I'll show you why. Give me 1 second. I think it's 1228. Activate. 1228. Okay, because you see this is the most recent, but if you come here, it respected it from below, respected it from below, respected it from below. All right, so that's been heavily respected. And these lines, I tell everybody, you don't have to be perfect. You just have to be close because they're really kind of a zone anyway. It is remarkable how often they will hit right to the tick, okay, or the pip. But they really are more a zone than anything else. Let me see here. I'll go back a little bit. We need to have one right here. I'm not going to go back too much further. 1176. And that's probably good enough for now. So let's go back to current price. So we're going to switch back to candles. And you can either leave it, if you trade the 4 hour, you can leave it on the 4 hour. Okay, so let's just look at the 4 hour first. So again, on forex, I like the 4 hour, the 1 hour, and the 30 minute. I typically don't go down below the 30 minute on forex. And I'm not taking long swing trades on forex, so I'm not using the daily or anything like that. All right, so let's just kind of look and see what we have right now. Okay, what is price doing? Just simply looking at the chart. Let me bring this down just a touch, because that'll show us where that next level is up there. All right, what is price doing? Which direction are we trending? Remember, this is the 4 hour. So we're going back 1, 2, 3, 4, 5, 1, 2, 3, 4, 5, 1, 2, 3, 4, 5. We're going back 3 weeks just on what you can see on the screen here. So for the past 3 weeks, price has been what? Trending up, right? Trending up. Look at the 20. Okay, let's look at the 20 here. Has the 20 been respected? I would say yes. You may say, well, yeah, it's below and it's above. Yeah, correct. That is correct, but look what it's doing. It's staying right around the 20. When it gets too far away from the 20 to the upside, it pulls back. Gets too far away, it pulls back. Gets too far away, it pulls back. Right? But still, price action is going to the upside. Where would we look for a change in momentum? Well, if price starts to drop and we start putting in lower lows, okay, see this? This was the start of this move up here. Pulled back, and then went all the way up here. If we would come down and take this out, that would get my attention, right? Or if we would get down and get below the 200, that would definitely get my attention. Okay, until that happens, right? Until that happens, you have to understand what the dominant trend is. Okay, then you know what your levels are. All right, so let's just look here. On this 4 hour candle, 1409 and 1374. All right, so 10, that's about a 35 pip move right there. Okay, about a 35 pip move on just that 1 4 hour candle. And it came on a breakdown of a gravestone doji, which is this candle right here. Let me get a little bit closer. This is on the 4 hour. Okay, there's your gravestone doji. So you could have maybe waited if you wanted to be conservative, right? It was bouncing off of this level right here. Okay, a conservative play. Okay, it's really a price action play, is you wait and you try to go short right there. Okay, see that? And you also have to know that you've come back to the 20 again. You've come back to the 20. And again, if we bring this in, okay, always let price action tell you what it's doing. Okay, so here we were moving sideways, and then right about here we started going up for the past 3 weeks. Okay, higher high, higher low, higher high. Now we did put a lower low in here, but then we made a double top. We never took out this. Okay, and we know what that means. All right, but you see the double top here, and then we came down, made another higher low, and then went higher high, higher low, higher high, higher low. Okay, so we're still moving up until something changes. All right, Kelsey is saying, what are your thoughts on a bearish swing to the 311 area? Okay, I'll go back. Give me 1 second, Kelsey. I want to show everybody how this looks different. Okay, so now we're on the 1 hour of Euro USD. Okay, this is the 1 hour. So you can look for entries. You can look for what is it doing when it gets to certain levels, right? Okay, and notice this, because this is what is about to occur on ES. Okay, what did we say on ES? We're getting the two moving averages are starting to converge. Look what happened when they converged here, okay, right here on Euro USD. I told you that's a building of energy when the two of them converge together. Since they've converged, what happened? Strong move to the upside. All right, let's look here. From this hammer, which was Friday of last week, right? Yes, Friday of last week to right here. This was Wednesday of this week, so that's only 4 days. So in 4 days, if you're somebody who likes to swing trade forex, where these came together and you got this nice signal right here, right? Got a nice hammer and it took off and it's just been going right up to 20, and then finally it started to move back down this direction. Then we know that it did come back up because on that 4 hour we got that double top. But from here, let's just see what this was. 1291 to 1451. So let's see. My math is horrible when I do it quickly. 160 pips. All right. So we got 160 pips from where these moving averages came together and then moved up to here, and then it came down below, right? And we come back over here. And then right here is where we got that double top. Now we're moving down. Okay, this is on the hourly. So now we're waiting to see. You see we're right at a level here, 1.1380. We get everything brought back up. So now we're going to see, are we going to lose this level and start to drop? Okay, so this is the hourly, and then you can even go to the 30-minute, whatever you like. I just personally on forex, I don't usually go below the 30-minute. Okay, so look at this on the 30-minute. Look at that drop, and then it stopped right here at this level, and you got the 200 coming up from underneath. All right, so Grayson, I know you trade primarily forex. I would be really interested to see what happens here at this level, or if it drops here to the 200. Okay, do we get a bounce and we start moving back up, or do we break through and we start moving lower? Let's come back over here as well. Yep. Okay, so right in through here, we should be seeing, right? Nothing's 100%, but let me draw it in just so everybody can see it. Okay, I just noticed these things with my eyes, but you see how price came up, then pulled back, and then we blasted higher, right? So really, let me draw this across so you can see it. So really, right here should be some support, and notice our support level runs right through it. So if it makes it here, I would anticipate at least some sort of bounce. Okay, at least some sort of bounce. Now, we know our rules of momentum. If we're below 40, that usually means it's highly unlikely that we're going to get all the way back up here to the origin of the move on the bounce. Okay, if we're somewhere in here, when we get to a level of either demand or support, of strong support, I would call this a level of strong support, right? We had the pullback, we had the price leaving the level strong, and we have an area of support, a support level, and we have the 200 SMA. And we're a little bit below 40, 35 right now. But if it gets down to right here, I would expect to see some sort of a bounce. I can't tell you how big. If it is a strong one, then I would be looking right here. Okay, I would be looking right here where this little basing area is. Okay, somewhere right in there. If it's a strong bounce. If it comes down and just barely bounces and keeps trying to test it, then I would worry about it possibly breaking through. All right? All right, so now let me go back to ES. And then we'll wrap this up. Okay, so Kelsey, you said back to the 311 area. Now that would be on SPY, and I think that's what you trade. But that would be 3110 on ES. 311 would be 3110 on ES. How likely are we to get down there? Let's look here. I would say not super likely. Let me look. I want to look at a couple other things. Give me 1 second here. I want to look at the 4 hour. You're welcome, Grayson. My pleasure, my friend. All right, so 3110 is like clear down in here. All right, now that's where the 200 is. These are 4 hour candles, so every 6 of these is a day. Well, you can look right down here. So, let's see. Thursday, Friday, Saturday, Sunday, Monday, Tuesday, Wednesday, Thursday. There's a week. Excuse me, a week. All right, so it took us over a week to get up to where we're at right now. It took us a week to get to where we are right now. But you can see, you see these big red candles. What do they say, right? You take the stairs up, you take the elevator down. So when they drop, they typically drop a lot faster than they went up. So you're asking if it breaks 3189, which is probably in here somewhere where the 20 is. And then, okay, so down to here, down to here. Remember, I'm on a 4 hour right now. I'm not on a 30 minute. Okay, so these take a lot longer to play out. So if it broke that in this level, okay, this is the supply zone that it's in right now. Is there a chance for it to get back down there? There is. I mean, absolutely. Would it happen in a day? Probably not. I mean, unless you get something like this, right? So if you broke that and got this kind of candle, this candle here was 26. This was a $66 candle. So if it broke here and you got a $66 candle, that would get you down close, not quite all the way, but you can't bank on $66 candles, right? That's not a high probability play. So if you broke here and could get below this, then your next areas, now these are swing trades. These would not be day trades. Your next area of support would be down here, and then down here, this wick, and then that level that you're talking about is right around in here where my cursor is now, just below this 200. So it's possible. It just probably wouldn't happen, obviously, in a day or two. Okay, so hopefully that answers your question. All right. I've already been on, I said I was going to be on here about 30 minutes, but we've actually been on here almost an hour. So good stuff today, though. Good stuff. Tomorrow, as long as I have time, we'll probably do one tomorrow afternoon. If I go on earlier for any reason, I'll let everybody know. I'll post it both on Twitter and in the room so everybody knows. But we had a nice group today, and I saw the numbers kind of fluctuating up and down, but we had a nice group. So if anybody's brand new, make sure to check us out at simpletradinglife.com. Click on the free chat room button. Everything is free. Come on and join us. And if you could, help us out here on YouTube. Give us 2 thumbs up. Subscribe to the channel. And definitely turn on the notifications bell. And you'll always know when we go live. Thank you so much for joining us, everybody. And we will see you in the room. Bye-bye.